simplify everything down, I just say this is the best macro opportunity of all time. We've got the best risk-adjusted return asset that has the highest performance of any asset in history. All of these, like NASDAQ, and you're probably a bear of the NASDAQ too, but all of these things are secular trends in a logarithmic chart because they're secular trends. They're not cyclical.
The CEO of Real Vision believes Solana will spearhead the next phase of significant growth for digital assets. He predicts that Solana will play a crucial role in bringing the cryptocurrency market out of its current stagnation and into a new bull market phase. Paul highlights two important developments on the Solana blockchain that reinforce his bullish outlook on Solana. The first is NFT compression, which enables various use cases such as ticketing and derivative contracts at low cost, thereby improving the scalability of NFTs. The second is FireDancer, a third-party validator software that will be released next year and will improve the speed, scalability, and efficiency of Solana's transaction processing. These developments convinced Paul to allocate 90% of his cryptocurrency investments to Solana, underscoring his confidence in its potential. Digital asset investment firm 21 Shares has filed for regulatory approval to launch an exchange-traded fund ETF tied to Solana's spot price, following a similar filing by Van Eck. Both firms plan to list their Solana ETFs on the Chicago Board Options Exchange, CBOE, pending regulatory approval to change their rules. According to Raoul Pal, this can be your last chance to buy Solana below $150. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
The world is massively in debt. The workforce is shrinking. Population growth is slowing down. It's slowing down GDP growth. So there's not enough GDP growth to pay or service the amount of debts out there. And what we found since 2008, that the answer to this debt issue has been printing of more money, debasement of currency. People think of it in terms of, at first they think it's going to be inflation, as in the price of CPI goes up, but it's actually not. It's actually something much worse, is wages don't rise, but assets go up, because optically you're debasing the currency. Your future self is getting poorer because assets are all about storing wealth for future deferred consumption. But what's happening is you can't afford as much of that now. And so your future self is in fact poorer. So a classic example is a 35-year-old now in the United States, getting married, having kids. A house is very expensive now. Compared to when Peter and I were young, it was relatively cheap, 3 times incomes. Now it's like 10 times incomes. So there's no real way of getting up the ladder. The equity market is much more expensive. Your kind of percentage share of the S&P is so much less. So the advantages that your parents had are not available to you. If I transfer you a Bitcoin, it goes straight into your Ledger wallet, let's say, and you own it. It's yours. It's self-custody. Gold is more difficult to self-custody just because of its size. Now, many people around the world do self-custody their gold, and that's fine too. Again, I don't have an issue, but in a world of 8 billion people where we live on the internet, it actually is nice to have an asset. And Peter's absolutely right. We've memed $1 trillion currency into existence. We've memed it. It's just human narrative.
Alex Thorne, head of research at Galaxy Digital, discusses the regulatory hurdles facing SEC approval of Solana's spot ETFs filed by Van Eck and 21 Shares. These filings aim to integrate Solana into regulated financial markets but face complications due to the SEC's view that Solana is an unregistered security. Van Eck's proposal is still preliminary and requires more detailed structures. Once initiated, the review process could take up to 240 days. The recent FIT21 Act, which clarifies regulatory boundaries between the SEC and CFTC, could improve the chances of approval of Solana ETPs. Thorne notes that Van Eck's proactive filing strategy is commendable amid significant regulatory changes. Paul made a bold prediction regarding Bitcoin. Paul suggests that Bitcoin is about to break out of a technical pattern known as the cup and handle and enter what he calls the banana zone. Paul coined the term banana zone to describe a phase of rapid and extreme price increases in the cryptocurrency market. This phase is marked by exponential price increases, widespread euphoria in the markets, and high volatility, although it is usually short-lived. During this period, most cryptocurrencies experience substantial gains, reflecting the most bullish phase of a cryptocurrency bull market. The cup and handle pattern is a classic chart pattern used in technical analysis, which usually indicates a bullish continuation. The pattern resembles a cup with a rounded bottom, followed by a period of consolidation that forms a handle. A breakout of this pattern often signals a significant upward movement, which Paul believes could propel Bitcoin into the banana zone. Bitcoin proponents in the gold versus Bitcoin debate tout its decentralized nature, fixed supply, and blockchain technology, potentially positioning it as a new global currency that can be frictionlessly transferred from one party to another without the storage cost inherent in traditional assets like gold. They see Bitcoin as the future of money, offering borderless transactions and protection from the currency debasement caused by central governments. Furthermore, Bitcoin investors refer to a new structural demand for the asset following the launch of several Bitcoin ETFs. Paul cites the fact that Bitcoin is one of the best performing assets across almost all standard timeframes. Furthermore, Raoul counters arguments that Bitcoin has no intrinsic value by stating that stories matter in financial markets. He says we've created a currency that's worth $1 trillion. We created it. It's just a human story. The same goes for gold. The same goes for everything we do, including religion. It's all a meme. So, memetics completely govern how humans understand the world around them. Critics of Bitcoin point to its volatility, regulatory and technological uncertainties, and the lack of intrinsic value. It is undeniable that the asset could prove difficult to hold on to during its extreme downturns. That said, investors have so far been rewarded for their commitment. The digital nature of Bitcoin makes it susceptible to become obsolete, raising further questions about its long-term viability. Although this is difficult to assess, it is worth considering that, like the birth of the internet, the viability of the idea behind Bitcoin does not mean that Bitcoin itself will succeed in the long term. Proponents of gold in the gold versus Bitcoin debate tout its millennia-old history as a reliable source of value, emphasizing its tangible nature and wide acceptance in economies around the world. Proponents of gold also cite the fact that it is not merely an investment asset, but serves a functional purpose outside of serving as currency. Every day is more digital than the day before. We're seeing a never-ending trend, and in a digital world, we can create infinite amounts of anything digital. And we saw that. So things like email went from something we pay for to something free. Cloud computing, everything, computing itself, is seeing its cost go down exponentially because anything digital becomes almost worthless because you can create infinite amounts of it. So it's a real problem in the digital world until the invention of the blockchain, which creates digital scarcity. This is a mathematical way of creating scarcity. So scarcity is the asset, and that's why gold is precious. It's a scarce asset. That's why silver is less valuable than gold. There's more money. There's a lot of money. That's why copper is less valuable than gold. Scarcity is what we humans value. And in a digital world where everything can be created infinitely, like food in the physical world, what you need to maintain your value is something. And that's what blockchain did.